Good afternoon. This is Campbell McCrary, Amvest Capital in New York City. Welcome to the Amvest Capital Inc. live webinar with Arizona Gold Corp. Arizona trades on the TSX as AZG, and as KERMF on the OTCQB. Hope you'll enjoy today's program. It will be available in replay mode. Feel free to chat in your questions. Please, we really would love your questions, and we'll get to them, incorporate them into our Amvest line of questions. Amvest, of course, is a New York-based specialist investment management and corporate finance firm focused solely in the natural resource sector. Always all important disclaimer, this call is for informational purposes only. Very pleased to have with us today Giulio Bonifacio, the CEO and Director of Arizona, has over 30 years in senior executive positions in the mining industry and is the founder and was the CEO of Nevada Copper. Instrumental in providing over $700 million of capital to projects of merit while having led the efforts at every stage of development for exploration, production, permitting, and construction. He is a CPA with extensive experience in the capital markets, securities matters, project finance, and M&A, and held senior roles with Getty Resources, Total, and Vengold. And if you want to turn on your webcam as well, Giulio, we'll get started. Again, please send in your questions, and we'll ask them. So now's your time. Welcome. I'll see you when you're done, Giulio.
All right. Well, thank you very much, Campbell. And just to confirm, you can see the PowerPoint presentation.
All good.
Fair enough. So let's turn through it. As you can see by the caption, it is a fully permitted project, and near-term production is just around the corner. So, regardless of the context of the capital markets, what's gone on historically, we've done a lot of good things here in the last 12 months to position ourselves appropriately for what will be, I believe, a more robust market moving forward. And there's frankly very few projects like this that exist that have the upside. So we'll go through it. We will have some time at the end to answer questions. Campbell has provided you with effectively an overview of my background, but the past doesn't matter. I've had a good level of success. It's really about taking this project, this company to the next level. A cautionary statement, let's just push through that. You can read that on your own accord. In terms of investment highlights, I mean, it's a bit of a repeat. We had a legacy of past investors that, frankly, in some instances, really didn't understand the process. And, I think what we've seen is we've seen a good series of new investors step in, new shareholders step in. Recently we've traded a good level of volume, not as much recently, but a good amount of volume to, we're changing the share registry appropriately with more sophisticated, knowledgeable individuals that do understand the value proposition, but also, more importantly, understand what needs to be done to get it to the next level and in a very sophisticated way, if you will. Mine life extension. You look at this project historically. You look at some of the claims in terms of production. It came out with a 4.5-year mine life. The intent clearly is to expand upon that. I'll touch on why we think we've done that. I think there's a further validation that took place as a result of the project funding package that we put in, but I think we'll leave that until a few slides later. All the permits are in hand, and for some of you, it'll be a repeat as pre-existing shareholders or existing shareholders, but that's not a simple thing to accomplish. Advancing the project like we have in the last 12 months, I think, is the most significant development. We are adding a value on a day-to-day basis, and we're refining the inputs, we're refining the costing, we're refining the estimates, and if anything, that just simply improves the opportunity and increases our ability to succeed from an execution standpoint. Processing plant, that was a key point. Historically had some issues on the recovery, historically had some issues in the method in which it was being processed. It was looking at shipping out a float concentrator, which is really not an effective route. Part and parcel of the permits that were modified was to allow us to apply cyanide. We did that successfully, received our final federal permit by way of a permit acceptance from the EPA that allows us to apply cyanide. That in itself then allowed us to also look at accelerating our day-to-day throughput to 600 tons per day, but also look at whole ore leach, which some have asked me, some shareholders have asked me. The clear benefit is when you're doing a float concentrate, there's logistic issues, there's cost issues, and there's a recovery issue. The recovery for float con was closer to 85%. with respects to whole or leach, we're looking closer to 95%. So there's a clear reason why we moved in that direction and we brought on Hanlon. The decision and record approving all this is clearly on file, but key takeaway point is modified our state permits as well as our federal permit. Mine development, that's going to be a big cost item for us. And so we're going to be very methodical in that exercise and review it. We've got advanced bids in. We do benefit from the amount of underground development relative to what we believe it will cost us to continue to develop the underground workings, but we've already got 4,300 meters, which in itself is pretty significant. There's also, based on past production, our current resource and what we see, good opportunity to drill some of the prospective multi-million ounce targets that we think exist on this project, which is a rather large land package. In terms of the people, I've added people appropriately that have the skill set. And most recently, John Galassini, who, if you look at his CV, you look at what we have on our website, you'll walk away with, hey, this guy is an individual that knows how to execute on a project. And so, fortunately, there was a history that I had with John that predates this company. We were able to bring him on. Dale worked with me at Nevada Copper, and so now we've got a very competent CFO that can understand both the corporate reporting side of the equation, but as well as the project accounting and what goes into the building of a mine. And his background, his strength is taking projects from stage of development to production. And if you look at his CV, you'll see that he's been involved with more than a couple of projects. Dave Thomas, his background speaks for itself as well. Mike Smith has been with the company, but he's done an exceptional job for us in terms of, understanding the existing underground deposit, but also appreciating that in order to avoid the pitfalls of the past, we do need to do the work that's required from a delineation, infill drilling perspective, as well as implementing appropriate ore controls, all of which mitigate risk. And that's what you're trying to do in this business. But with gold where it's at, I think we have a really good opportunity here. In terms of what this company looked like when I stepped in, or as recent as 12 to 13 months ago, we had limited cash, we had debt that was maturing of significance. We've turned that around. We did an offering back in August for purposes of drilling our resource, expanding it. I'll speak to that shortly. And we also recently executed a project funding package that gets us a long way towards production. So if you look at it today, we're sitting on a good healthy cash balance. Our market cap is very, very modest on a relative basis when you consider ounces and all the work that's been done. Even if you looked at the historical expenditures on the project, that's one basis of measure. I'm not saying that that's how you should look at it in its entirety, but without a doubt, we're well positioned to have success here. Of the $18 million US Star Royalties streaming package, we have to deliver 27,200 ounces of gold. They're a partner on this project. We've received $12 million. We'll get another 6 before the end of June. We just haven't rapidly spent the money yet, so we made a conscious decision that we don't need it by April 30th. Let's look at teeing it up by June 30th. But that gets us a long way towards where we need to get to. I will say very clearly and transparently, and it's not a secret, at some point we will have to top up some additional capital. We're working out what that number is going to be, but we don't think it's going to be insurmountable. It'll be in an amount and at a share price that hopefully is a lot more improved from what we currently see. And there's reasons that we can point to that, and I'll get to that as we move through it. Capital structure, we've traded a bunch of shares, a good thing. I do think the share price will gap higher. I think it's a fantastic buying opportunity. Very few companies have what we have in front of us, albeit it took us a while to get here. I would completely concur on that point, but we're in a fantastic position. Looking at cash, looking at our market cap, looking at ounces, and looking at the fact that we can generate up to 20 million bucks a year in cash flow. Most companies can't speak to that for at least 5 to 10 years. Most companies have early stage projects that are years and years away from even that opportunity. Location of the asset, American Southwest. I'm very, very familiar with the American Southwest. Spent 13 years at Nevada Copper, took it from a small deposit to what is a large deposit, permitted it, sunk a production size shaft. It is now in production. They've had some stumbles along the way, but by all accounts, it appears to be moving forward in a positive fashion. They've issued, since my departure, probably close to 1.5 billion, or I stand corrected, 1.7 billion shares. So when you look at the share price, that's not the measure. The market cap of that company, enterprise value, is close to 600 million. I think it will continue to rise. It's production in the American Southwest. It's got upside opportunity. My only point of reference on mentioning Nevada Copper is it took a long time to get us to that point, but I do know how to execute at every stage of development, from exploration development to execution on the mine side. When you look at some of these photos, these are our photos. The infrastructure, the amount of money that's been spent on this project is the opportunity, and I can't impress that upon you enough. Near-term production, again, how many companies out there can even make that statement that have a market cap as modest as ours? And as a result, I will speak to the fact that, you know, there's also a lot of corporate groups that are looking to step in. We're not going to give this company away, but if we can grow it by way of acquisition at what would be a significant premium to our existing share price, of course, we're going to give consideration to that. Many, many companies in our space need to grow. What better asset to grow from than a Copperstone that has near-term production and upside in ounces? Key de-risking project milestones achieved. And again, we haven't been quiet, you know, relatively speaking. You know, firstly, we had to clean up what was a financial situation that had its flaws, and we've done that handsomely, and you'll see that by way of the next quarter financials that will come out here in the next 20 to 30 days, in fact, by the 15th of May. But we've advanced in net testing, 95% recovery by way of leaching and whole ore leach. In 2019, we had a very successful drill program. We've got all the permits, we've advanced the engineering, we continue to do so. Now we're in the midst of refurbishment of the existing mill and upgrade to move it away from a float concentration to processing of a doré. We've identified lead order items on the plant and mining equipment, and we are advancing our mining contract proposals with the mine contractor. It's going to be contract mining initially. Eventually, there's an opportunity if we move to owners mining, but again, one step at a time, sequentially, and ensure that we execute appropriately. This gives you a sense of the infrastructure, and you know, I think it's worthwhile to point to, and I know you've seen some of these visuals, but you know, the mill itself is built. Changing the process side of that equation comes with a cost, but it's not a staggering cost, but there's extreme benefit that comes from that by merely increasing the recovery from 85, 86% to 95%, we get payback on that additional capital cost in short order. The underground access, 2 portals, 4,300 meters. There's a very costly amount of money went into this historically. Site facilities, again, you got past production, you've got some pre-existing site facilities, you've got tailings, you've got permits, you've got a wealth of infrastructure that, if anything, simply presents the opportunity. It's why we can take a project into production for what is an amount of money that no one in our space can do it for. I mean, any new project would be 2 to 3 times of what we're putting forth in terms of our capital projections. Project achievements. We've been moving pretty quickly now. You know, final engineering in terms of going through the process and advancing it. You have to advance it beyond feasibility stage and define it appropriately. And, you know, backfill design, understanding geotech in a very concise way, because that impacts your contracting costs from a development standpoint. Ventilation, water management, electrical infrastructure. I'm going to be very clear on some of these things. I've gotten some funny phone calls and comments from past investors that predate me, and I will say this. Getting this back into production is not just like turning on a light switch. And that's an extreme reference, but I want to be very, very clear. There's work that has to be done. It has to be done in a sequential way, and you have to go through each of these categories. Backfill, ground control, mine engineering in terms of design. Now we're doing our infill delineation drilling for purposes of stope design. These are all important factors that, if you will, mitigate risk, and it was always envisioned from the outset. So again, it's not about turning on a mill that was requiring for refurbishment and running ore. It's about doing it right and doing it effectively and doing it smart. And that arguably is the reason that, you know, there were past statements that this thing would be in production in 2018 or 19. That was utter and complete rubbish. I stepped in at 19 and I knew from the outset that there was work to be done. And I think fixing up the balance sheet and our financial position was a key ingredient towards doing that. Mineral processing, again, whole ore leach. It's built into our design. It is how we got the funding package from the streaming group. Milestones achieved. Now I want to move to what I think is more compelling. What you see on the left. Now, before I do that, I want to make it very clear that the pre-feasibility study that was done on this project was done in 2018, April 2018. It's outdated. It represented a 4-year mine life. It did in fact reflect whole or leach. It did in fact reflect a slightly lower royalty, but that 4-year mine life is what we've been working on. As I noted, we have put in place a project funding package. The group that came in, as you'd expect, engaged a senior engineering group, and by their accounts spent over 1,000 hours in due diligence. They're giving us value for a mine life that well exceeds 4 years. They're giving us value for the capital projections. You know, historically we had it at 23. Of course, everything's gone up in cost, and you should expect a slightly higher cost on the capex. We're refining those numbers. We're advancing those numbers to a point where we can do it within 5%, and we're getting close in all areas. But that again is not something that you can do until you advance the engineering side of the equation, which really we've done in the background, but we've started in a very serious, aggressive way since we closed that project funding package. I'm restricted in terms of what I can say. So that note 4 is something I want you all to pay attention to and read. But the variables from the pre-feasibility numbers, even at 40,000 ounces, a 4-year mine life, slightly lower all-in cost, yet an NPV that was very attractive. Now, as you may recall, that's at $1,500 gold. Gold is sort of in the $1,750 to $1,800 range. I think gold's primed to move higher, but even if it stays at this range, that number that I'm putting forth with something that can be in production in a short period of time well exceeds our market cap currently. Now, I know that these numbers have improved significantly. I'm not at liberty to say it, speak to it in a presentation. You know, we vetted this material with council, and the security regulations prohibit me from doing that. But I will point to the fact that, of course, the NPV number is higher. Of course, the IR number is higher. CapEx, we think, will also be higher to a certain extent. And of course, all-in cost increased slightly, but the mine life is what we anticipate. That's what we got. We were able to close the project funding package on. I think that's a key point. Other points, historically staggering, significant tax bills. So the pre-feasibility numbers don't reflect those tax bills. Of course, we will, in fact, reflect those tax bills. We'll be tax-free for the initial mine life. And that in itself is going to add a bunch of value. In terms of cash flow, every year of mine life adds at least $20 million. You can do the math pretty readily. But depending on what gold prices do, you can see that there's a real opportunity to leverage based on an increasing commodity price. And that's what we're anticipating here as we move forward. But to close off on this slide, the cautionary note I think is pretty critical. I can give you indications by way of forward-looking statements, but that's all I can do at this point. So you'll see that some of the presentation material from times past was a little bit more aggressive. I've changed that for obvious reasons. This is a new PowerPoint that we will eventually put up on the website, likely later this week or early next week. In terms of project timeline, if all goes well and we have all the money that we need, we've got the lion's share of it, we'll get into production by the beginning of next year. Again, we'll get to ore at the end of the year, but production by Q1 of 2022. The streaming company that we entered into the transaction with went out and raised a significant amount of capital. They went public about 2-3 months ago. The lion's share of the capital was raised for purposes of this asset. If you go to their website, you look at their materials, you look at any presentation that they have done, you'll see that Copperstone is key and foremost in their thinking and plans. It's a very strong financial group as well as mining group. Each of the individuals has a stellar background and years of experience. When you augment that with what we have on the team, from John Galasini to Dale to Dave Thomas, you'll see that we as well have years and years of experience, and we're going to do what we need to do, and we're going to mitigate the risk the way you need to in a project like this. Drilling results. For the longest time, people say, well, why are you drilling? Well, why not? We had a 4-year mine life and we showed 400,000 ounces. We raised money in August of 2020 for purposes of growing the resource. Now, when you look at the resource, you look at the reserve, very conservatively calculated, but why not do the additional drilling? We will be coming out with an updated resource likely before the end of Q2. We've completed our program. We're going to incorporate and capture approximately 13,000 meters of drilling from 2019 to 21. In terms of the method in which the resource was calculated, again, outdated. We show globally 422,000 ounces, of which we show 175,000 ounces proven probable. We do expect to see some considerable gains. Star, I get back to them. They did their work. They did extensive due diligence. I think they've given us full value for what will be an extended mine life, as well as just a good opportunity to add ounces. By way of simple comparisons, if you look at the method in which the resource was calculated, the gold price, the cutoff grade, you look at the search radiuses, you look at what was done in terms of mineralized domains, it's clear that we made some gains. I will say that the slide references I show here are incorrect. I do need to make that correction, but in the interest of time, I didn't have a chance to make this change. This is, as I said, an updated PowerPoint as of yesterday. But I did want to review it, so what better platform to review it than here? But that would be the only area that you'll see us change. Tightly defined mineralized domains, conservative capping strategy. Of course, there's areas, as you've seen with some of the drilling, that come in at double digits. Well, we're not going to pick up in certain areas 40 grams. We're going to cap it appropriately by way of constraining it the way one needs to. So we do expect to see good considerable upside on the resource. That's a great valuation matrix. There's companies out there that, to my surprise, they maybe don't have the legacy issues that Kerr did, have a higher market cap, yet they have fewer ounces and are not even close to production. So I'll leave you with that thought. Reality is we're very close to production with what we've just done. We've validated the asset. We've cleaned up the financial position of the company. It's in the best condition it's ever been. And if for whatever reason people are of the view that they should sell their shares at 12 cents, what a fantastic buying opportunity. Now, when you look at the project historically, produced 500,000 ounces at 3 grams. We've had good success. There's good open extent and strike. Of course, as we continue to develop it, we think we can add more ounces, and that's the key point. We will add those ounces as we continue on with the underground development. With the size of our land package, I will add, we will also test other areas outside the Copperstone and footwall zones. So there's also blue sky exploration potential that could be a game changer for this company and for the value proposition. In the space, the market is paying handsomely for multi-million ounce deposits. So here you have a project that can move into production in short order with the lion's share of funding in place, as well as upside in terms of global ounces. That in itself, I think, makes it a very attractive opportunity for any incoming shareholder. Optimization, expansion, delineation, infill. We're moving through that. We're now in the delineation infill drilling. In fact, some of the drilling we've seen recently has visible gold in it. That's a rarity on this project, but that speaks to what potentially might be coming. Drill results ongoing. I've been pretty diligent about that. We were delayed on the drilling program based on an issue with the initial drill contractor we had in place. That has all been resolved, and as you've seen, there's been steady news flow. I got to also comment that someone said, well, why are you putting out drill results? It's all about going into mining. It's not just about moving it to production. It's about all of the above. It's about adding ounces. It's about extending mine life, and it is about execution. But when I have those type of exchanges with investors, I do get puzzled at times. If I add an ounce or 100,000 ounces or 200,000 ounces, by that mere addition, I've increased the value proposition for our shareholders, and the market will appropriately pay for it as you continue to do that. So our updated resource is coming out before the end of June. Approximately 13 to 15,000 meters. Of course, I'm going to use approximate numbers for the time being for purposes of presentation. That includes 5,000 meters that we drilled in 2019. Now, the next couple of slides are really just a recap. Some would look at them as outdated, but you shouldn't. What you should be looking at are the levels of grade and the intervals. 2019 drilling campaign, extremely positive. We followed up on that drilling, and nothing in the current drilling, albeit not at these intervals or grade levels other than in certain instances, points to anything other than the continuation and confirmation that the mineralized domains that we've identified exceed our previous defined areas. Drill locations, drill stations, this is in the D zone. I want to point just to a couple of holes. 1821 clearly is one I pointed to historically, but I think it is worth pointing to because it does have a real positive impact outside of the mineralized domains. Now, when I look at this slide, one should look at the defined mineralized domains, understand these will change, but also understand that as we step out beyond those defined mineralized domains, we're adding ounces. Now, are we adding measured and indicated? The answer is no. You're not going to do that till you put in place the underground development. As you put in the underground development, then you do the infill delineation drilling, and you move it into the M&I category, and from that you move it to proven and probable. So we will add ounces, in my view. We will continue to add mine life with what we currently see, but as we continue to mine it, there's no reason to think that we can't continue to mine it for an extended period of time as we develop it further. And that is a key point that certain investors unfortunately don't completely appreciate. Surface drilling, confirmation, if you will. We had some good grades over some decent intervals, good mining widths. That's the key point, the mining widths. And you look at all the hot numbers within this, you can see that there's continuation. This is all very, very positive in terms of our modeling and in terms of what it represents. Again, all of this will be captured in an updated resource prior to the end of Q2 is our current timeline, and I don't expect there to be much trickle beyond that. That doesn't mean we move away from execution on the mine design and detailed engineering and engaging and bringing in place a mine contractor. We will continue to do that. We've been extremely busy, and again, with the addition of John Galassini, we've added someone that's got an incredible amount of history, both and knowledge and experience, both in underground and open pit mining. And again, I would implore you to, look at the website. It gives you a full sort of summary of his history and background, all of which we benefit from. And then with Dave Thomas and his ability to execute, working closely with John Galassini, I think we've got an incredibly strong team. And that was also part of what I needed to do here over the last number of months, if you will. Some more outlines on the underground drilling, expansion drilling, but you can see that we hit some very good values as well. In terms of underground drill stations, that's a good recent visual. Some of you have probably seen it, the infrastructure you've seen. So let us now, maybe at this stage, I'll turn it over to Campbell. We can move forward with some questions that some of the callers may want to put forth. Over to you, Campbell.
Sure. Okay. Thank you for your questions. Please send in your questions and we'll incorporate them into our engagement right now. You've covered a lot of this, but some people just have ideas on their mind, and so just to reiterate, do you have to raise more money, or you're good for your core mission?
I've been pretty clear that we picked up the lion's share of it. Of course, we'll have to raise some additional monies. We're not pressed to do so, and no one in this company wants to raise it at this price point. So I can make that commitment. I think that what we're trying to do consciously is clean up the share ownership. We're doing that. If the share price gaps, we will top up accordingly at some point this year, and I'll leave it at that. But to go into something like this and assume that no additional monies were required,
right?
Completely flawed. The project funding package was more about the validation, but it also mitigated dilution. The mere fact that we were able to issue that amount of money or raise that amount of money probably saved 200 million shares on the share flow. So there will be a need at some future point. No secret. We've been pretty clear about that from the outset.
Okay, and then have you drawn down some or all of the Star Royalties money?
No, we've drawn down. We haven't
on
spent
that?
the money at the same basis that we initially anticipated. We've drawn down 12. We expect to get the next 6 million US before June. So it aligns nicely with what we're looking at doing. That way we don't lose any real time. But it was a mutually agreed decision based on where we stood in terms of how much of the 12 US have we spent to date. And we've been very diligent about that spend. And of course, the other thing we want to do is advance all the engineering so that we have a real good firm handle on this number. And that's why I'm using the two bookends of 25 to 30 as a general range. And then, I'm assuming you can still see the screen.
Yes, and that's good. And then would you say you're on schedule, behind schedule, within?
We're within range. I don't want to commit to that. The point is this get into production by early next year? The answer is yes, assuming everything lines up the way it needs to. Again, I want to be very clear for some of the investors. It's not just like turning on a light switch.
Yeah.
There's a lot that goes into a start of a mine. A new build or a restart, you go through the same areas that you need to pay attention to and focus. For example, on the mill, the money we raised with Star Royalties is predicated on whole or leach. We want to move in that direction. There's lead order equipment that we have to make orders on. We've got commitments that we'll get them by certain points in time. But as you would know, within any supply chain, there are potential situations where you have some delays. We don't expect those. I don't want to concern anyone. We don't expect any of that. But again, you know, it's not, you have to understand that. And if you don't, that's unfortunate. That's just a reality. But, you know, it's a relatively easy restart. We're currently on schedule along the lines of what you have here.
Okay. The drilling program, again, how many meters was planned? How many do you expect are to do?
We've done a total on the resource expansion about 13,000 meters. That's, in view of the timeline, that's more than adequate for purposes of the updated resource. We're now into the delineation infill drilling, which will add another approximately 3,000 meters, but we're not going to be able to capture that into the updated resource, nor is it really necessary. The delineation drilling we're doing currently is for, you know, final stope design. So it's really about variability within the deposit and understanding very clearly what it looks like so that we can appropriately within any underground deposit ensure that we mitigate dilution. And that's what's needed. It's just an appropriate step.
What exact area might you focus on next regarding drilling?
Sorry, what? Repeat that?
What exact area might you focus on next regarding drilling, of course?
Well, I'm sorry, I thought I answered that. We're doing a delineation infill drilling.
And
So
anything after
we
that?
have to do that in the C and D zone, and that's where we do it because that's where the underground development is. So if I could turn to a slide when we do that, visually it's always easier to track. Excuse me for a second. In this area here is where the initial mining will start. So it'll be predominantly in the D zone. Some of it will trickle into the C zone. But we've done, from the surface drilling that we've done it across A, B, and C zone at the base of the pit. That's the surface drilling that I made reference to. I'm going to jump ahead to it because I think it's important. Kind of gives you a sense of where some of that drilling took place. That's really to fill in the gaps on the data so we had a better handle on what we could expect from both the A and B zone specifically. Next question.
Yeah, are the indicated mineral resources in addition to the proven and probable reserves?
Let me turn to a slide on that. Sorry, the way it's typically done is you define your resource in all categories. In this case, in the inferred category, we have approximately 146,000 ounces. In the indicated category, 276,000. Of course, we do think we'll see some gains. This is the outdated 2018 resource estimate. From the measured and indicated is what you draw from to determine what your proven and probable is. But you do that on the back of stringent economics. And so they're not exclusive, part and parcel. So really it's how much of this do we believe is mineable based on stringent economic parameters, and how much of this do we think we've converted, and how much more do we think we can add to the whole system in terms of mine life. So this number, very simply, 2P, is derived from measured and indicated with tightly defined economic parameters in terms of cutoff grades and what is mineable pay grade ore.
Okay.
Next question.
Someone observed there seems to be a very large offer of stock. Do you know who it is? That
is, you know, I would agree. I mean, without jumping ahead into the answer too quickly, my only frustration has been the amount of selling. I think we're getting pushed through that. There's been a lot of buying, but I think we'll work through that. Again, it's a fantastic buying opportunity. The biggest shareholders are the directors, officers in certain funds that still maintain their position. That also includes Eric's brought that on slightly less than 8%. So I don't think there's a whole lot left to go. We've traded approximately 150 million shares in the last 6 months. A little softer these days, but you know, against the context of the capital markets, you know, gold stocks have come down across the board in many instances. I mean, all you have to do is look at the share prices of a Kinross, a Yamana, a Barrick, or Newmont, and you'll see they've come down by 30–40%. We've kind of held the line at 12 to 14 cents, and I'm very, very confident with what's coming, inclusive of the updated resource, that you see us push through that. But there definitely are folks out there that may have made the decision that they want to sell out of their gold holdings and move into possibly, you know, battery metals or something along those lines. That if anything is in my view a buying opportunity, and eventually I think you'll see, not even eventually, I think we'll get there pretty quickly. People will eventually gobble that up appropriately.
Stu?
Yeah, thanks for the presentation, Julio. So what are your kind of expectations from, you know, the drilling now and the resource upgrade? Are you targeting mine life extension or hoping to, you know, have upside, so for expansion?
Well, I mean, the first order of business is the resource, and that's not going to speak to mine life extension. It will give you an indication. I mean, all I can really say at this stage until we've got the information, and I don't yet. Do I think it's increased? The answer is yes. Has our project funding group looked at it and given us a green light in terms of what they see? And the answer is yes. And they've also, in the model, in order for them to give us $18 million US, they've given us full credit for mine life extension. So hopefully that answers your question, Stuart. It's just, I'm not one to throw out a number unless I know what it is exactly that's in front of me. But do I expect gains? By all means. And did the Star Group step in and do extensive due diligence and walk away with a very positive validation of the project, the asset, the resource, and the reserve? And the answer is yes.
Yeah. And then how would any of the recent infill drill results affect the overall grade, and how are they consistent with your current resource model?
Well, we just started in and just got a couple of those holes, and they're well beyond the grade that we had within the previous drilling. So that there's to date an improvement, but you know, that's pretty premature. Those are, we've seen 2 holes of a targeted 20 holes. They'll be short in distance, but it's really infill in itself. And you know, anytime you see visible gold, I think that speaks volumes. But you know, the last press release we put out, I think, gives you a sense that, you know, we're pleased with what we see.
Yep. And then how many different geological domains are in your resource, and do they all have the same geometological responses?
Sorry, could you repeat that question, Stuart? I didn't catch the last part.
The geological domains in your resource, are they all consistent, and have you done metallurgical work on all of them? Are they all the same?
Some of the drilling we did early on was in the C zone for that very purpose, so we could do some additional met testing. On any deposit, the biggest issue you have is variability of the deposit from a met perspective. And so, yeah, we had to do some additional drilling, but it's correlating properly. The project does carry a bit of copper, but copper is not a good thing in a leach circuit, right? So we wanted to make sure that was not going to be an issue for us as we apply cyanide. If you consume more cyanide, you increase your cost footprint. So the intent was to do the additional test work specifically in the C zone. We've got ample drilling in the D zone and C zone to a certain extent, but the A and B, we needed to do some additional test work. And we've got what is a very strong group on the process side, handling engineering, overseeing the refurbishment, but also RDI, which is headed up by an individual who's one of the more notable metallurgists in the space that's been involved with a number of startups. And so there hasn't been any issues that have caused us any real concern. And that was also an area to elaborate that Star looked at. They spent a fair bit of time on the met side of the equation, and that's how we moved to whole or leach. That was arguably the method in which we got there. Looking at the recoveries, but also understanding from the met perspective, it was in our best interest to look at moving forward on that basis. And that's on the back of, again, and I keep pointing to it understandably so, but you know, 1,000 hours of due diligence and an external group like the one they brought in that I can't mention that puts forth a pretty comprehensive report. I mean, all I can say is that's far more advanced than any feasibility study that you'll see. And
Yeah.
going from feasibility to execution, you know, there is a lot of work that needs to be done, and that's the work that we're currently executing on.
That was going to be my next question. You know, if you could tell me a bit about Star Royalties and how much due diligence they did before investing, but partly you answered that.
Well, I mean, we started the discussion with them. I'll give you timelines. We started the discussion with them in sort of June, July, and we wrapped it up in November. If you look at, they've done a couple of platforms with some of the other competitors to you folks. In one of the interviews that was done, their chief investment officer, who's a very knowledgeable mining individual, years of experience, ran a multi-billion-dollar fund out of Toronto for years and years and years, made mention of the fact that they spent over 1,000 hours in due diligence. So very, very extensive. And of course, if one does the reverse math, they're not going to give us $18 million US unless they're awfully comfortable with mine life, resource upside, mine life extension specifically, as well as getting a pretty good handle that the CapEx is going to be, within a range, all of which leads to that funding package. And then if you looked at the mere fact that they went to public by way of an RTO or an IPO, excuse me, back in the beginning of the year, and we raised $25 million. They had already given us 6, but most of the money was allocated to this project. They benefit extremely positively from this project relative to their resulting cash flow that they get by way of the stream.
1,000 hours is pretty impressive. Just one last question from me before I pass to Artie. Once you get in production, what's the kind of expansion look like in your head? Would it be, would 100,000 ounce per annum operation be out of the question here?
I don't think it's out of the question, but I think first and foremost, it's about the existing configuration and executing and ensuring that you've got at least a 6 to 8 year mine life. And then from that, by way of the drill bit, if you can expand it further, then look at expansion. But modifying the existing permits is relatively straightforward. The capacity, the design on the mill, the refurbishment is such that we can double up capacity. Well, not double up, we can get to about 1,100 tons per day. So yeah, we could arguably look at increasing the annual production, which is one opportunity that without a doubt that we've all looked at, but that wouldn't be something that would take place in 12 months. That's more likely 2 years to 3 years out at best, in my opinion. And that's at best, because you have to still modify a permit. You get on any permit, you have thresholds in there in terms of the yearly annualized tonnage. So we've got tonnage in place that allows us to process it to the 600 to 650 tons per day. There's one other angle to this that I want to be very clear about. And if you look at my background with bigger companies and bigger projects, this is a project I stepped into because I had familiarity with it. There's not many like it out there. It is now at a point where we've done a lot of the heavy lifting. It's a fantastic opportunity, but it also now is primed for an opportunity from a corporate perspective. There's many groups that have reached out to us for obvious reasons. If there's an ability to add value for all our stakeholders, and when you look at the ownership, for myself being the lower amount of the 3, but you look at the 2 individuals that have backstopped this deal for like, oh my gosh, 5, 6, 7, 8 years, I lost track. They own, between the 2 of them, they own about 28% of the company. So, and they're extremely intelligent, successful individuals. I also have written about $1 million to purchase stock, all at this level price point. So I'm extremely comfortable, I will say that. But if there's an ability to grow it and get a nice premium out of the gate appropriately with another company that has projects of equal value or greater value, then of course we'll consider that. So you have so many different forks in the road. You've got the resource update, you've got the fact that we've executed nicely, and just looking at the balance sheet that we put out the next couple of weeks, you'll see that last year we had limited funds and we had debt that was coming due. Now we've got debt that doesn't come due with the 2 principal shareholders, chairman, vice chairman, in December 31st of 2023, and we're sitting on about $9.5 million in cash with another 6 coming. And so when you do a side by side, and you look at all the value we've added, there's no comparison. This company has never been in better shape. But if I could facilitate an M&A transaction, because I do have experience in that area, I would like to do that. I think the platform itself, you need to move it to a bigger platform, and that's what's always going to garner better value, in my opinion. And so we'll look at those opportunities, but you can see something like on that happen in short order, because there's a lot of ongoing discussions, all of which further validate our ability to succeed and return value to our shareholders. And on that point, the only area of dissatisfaction for me is the share price. Done a lot of good work here, and I can completely understand why certain investors and shareholders are not happy to see it move sideways the way it has, but it's shaking up nicely. It's a fantastic opportunity. Now's the opportunity to average down. If you bought it at 30 or 40 cents, which is well before my time, or at the very least hold on, because I think there's a real compelling opportunity here on this project by way of all the different variables, from the resource, total ounces added, to execution, cash flow, to corporate opportunity, because where the project's located, the advanced nature of the asset, and the ability to take it into production for what is, a very modest amount of capital. Not a common thing to see in our space, just not. Next question.
Thanks for that, Artie.
Thank you. So you mentioned some optimization work to do in the processing side of things. I'm wondering if there will be another opportunity for the mine design optimization, because you guys are doing infill drilling. So with the better understanding of the resource, do you think there will be some optimization work?
That'll be an ongoing effort, as you'd expect. It'll be about capturing the additional infill delineation drawing from that, designing the mine stopes, and coming up with an appropriate advanced detailed mine plan. And for some of the audience, and some of the audience will appreciate this, you do not get that by way of a pre-feasibility study. It's back of the envelope, very cursory. It's not as thorough, not as detailed, and not what needs to be done. Part of the process is, again, that reference, which is a bit direct. It's not about simply turning it on. It's about doing all these things. I know you understand this already, but it's about doing that information, getting that information, and delineating, putting it in place. Also, in terms of ventilation, what ventilation needs do we have? We have to deal with MSHA. Electrical, what refurbishments? I mean, the thing was mothballed appropriately a number of years back, but do people think that the electrical system in its entirety is ready to move forward? The answer is no. There's going to need to be some repairs, and that's what we're working on. That's part of the budget that we have in front of us, right?
And a quick another question: is there any difference between the bids you are receiving for the development and the estimated ones?
The estimated ones, I think are within a range, but when I point to 25 to 30, I think I'm showing you my hand that the one thing there's certain parts of this business one can't control, and if labor costs have gone up, if mine contracting costs have gone up per foot of advancement, then you have to factor that in. I think the benefit we have is we can start in pretty quickly because we already have 4,300 meters. So I think that's a number that we need to work through in greater detail. And I think it's pretty critical to understand that there could be some changes. There's always variable pluses and minuses. There's potentially some other opportunities we'll benefit from what we initially costed to what we'll end up at.
Thank you. Campbell?
Yep. We're going to close up very soon, but a few more questions and statements and things. How's the engineering going?
I don't mean
Someone friendly
going well.
to the company is asking.
Yeah.
And
we spent a lot of time with Handle Engineering. We've, as I said, benefited from Dave Thomas, but in a very significant way with John Galassini, who's been with us now for a number of weeks, even in the background, going through it and coming up with an appropriate plan. So I think, if anything, that is clearly one of our strengths. I think that the mere fact that we were able to add an individual of his pedigree speaks volumes for the project. Guys like that do not step in unless they're pretty comfortable with what they say. And this is a project that he's starting to wrap his arms around, and we've got the benefit of Dave Thomas, who, if you look at his background as well, proven builder. And so I think we're in good shape. But the external groups, it's just to take that point forward. You're going to engage external groups, but the owner's team is critical. So the owner's team that we have on this side, and I participate in all those calls as you will expect, or would expect. I've been around it for a long time too. So, but I rely heavily on what is a very strong team, and then bringing Handle Engineering in, I think, has been a real benefit for us. They're a very strong group on the execution side of the equation. And by reference, there's a strong relationship with Handle Engineering and John Galassini. They've worked together in times past, the senior principal, so that was a real plus as well. There wasn't really a need for a transition period. They get along very, very well, and they understand each other and each other's operating styles. But overseeing the external groups is a key component to success here, and so I think we've benefited from that.
Have you been to the site recently? Has not being to the site been a hindrance, or you've
I, unfortunately, with
yeah,
travel
COVID?
restrictions,
Yeah.
I'm based as some of you may know, I'm based in Vancouver, Canada. I have not been to the site for a number of months, but everyone that works at the project, from John to Dave Thomas, they're at the site daily. We have regular, not Zoom calls, but we have regular Teams meetings 2 to 3 times a week and discuss all of it. But
Good.
I'll put something forth on that. The expertise sits within those individuals and the geology group, so I understand it well enough, but there's really no need for me to be at the project. I would like to have been to the project more recently, and I would like to take a number of analysts through to let them see that, boots on the ground, very uncommon to see a project that's blessed with this much infrastructure. But that'll take place appropriately at the right time.
Wrapping up, corporate insiders, any buying in the open market recently?
I bought a few months back. I own 7 million shares. I'll probably add to that position. There's a lot of people close to me that have added, bankers and analysts alike. So I think the only critique, and it's a valid critique, share price. Everyone, we are benefiting from this utter stupidity of the selling. That eventually stops. We're clearly benefiting from it. But I would like to see it stop sooner rather than later. And if you did a comparison, you'd see that our share price has been flat for much of the last 12 months. And if you look at many charts, they've gone up, they've gone down, and it's gone down significantly. We've traded across. So I think we're in many respects in better position to get the next leg up.
Someone writes in, he's very excited by the blue pearl zone. Presumably you are too. That's my ad. The blue pearl zone. Someone wrote in that they were quite excited by it. And I'm adding, how excited are you by the blue pearl zone?
Well, the only reason I stepped back into this wasn't because of the size of the project, was because I think there's a lot more land. But I think you have to pick and choose. And when I stepped in, the financial condition of the company was disastrous, and so that took me a fair bit of time to clean up. And I've done that. The second part of it was focusing in on the more relevant drivers for value, and I think moving it to production is a key driver, and then thereafter testing those targets is something I'm very keen to do. I mean, I truly believe that on a project like that, with that land package that produced 500,000 ounces back in the late 80s at close to 3 grams by way of an open pit, it's a detachment fault system. If there's another opportunity in a parallel structure, that's a game changer. So when I made my investment decision, if you will, it was looking at the 3 forks in the road in terms of short-term execution on a fully permitted project, and it's not easy to get a project permitted with a wealth of infrastructure, a wealth of tax pools. Number 2, upside on the existing resource. Number 3, corporate opportunities. Number 4, actually, blue sky prospectivity on a large land package that has been underexplored. If you look at some of the historical drilling, we've hit some fantastic values historically that were never followed up. The question is why. Now, allocation of capital. Do I want to allocate capital to it? Yeah, I do appropriately and accordingly. But right now, primary focus is execution on, both the updated resource and secondly, moving it to production.
Thank you. Want to thank everyone for tuning in and giving your questions. If you still have more questions, tried to get to everything, then email me or Julio, and we'll keep going the conversation. But tried to craft something for everyone's benefit. With that, Julio, would you please close? And why buy now? A lot of stories out there. Why tee up this for end of April, early May? If I was an investor.
Because it's got, in simple terms, it's got nothing but upside, and it's got upside for real reasons. And you have an opportunity to take some of the legacy investors who are not knowledgeable enough to know what they're sitting on. It's created a very good opportunity for a lot of individuals to pick up a meaningful position. And if you picked up 1 million to 2 million shares and the share price, multiplied by 3 to 5 times, I think that would justify your investment. If you know that you've got positive developments coming, number 1, you also know that there's a legitimate opportunity for a corporate opportunity that values it at a significant premium. that is all moving in the right direction. It justifies any investment today, as compared to what you see out there. Early stage projects with some good intervals that are years and years and years away from anything that speaks to economics or cash flow. To me, it's an easy decision. Now, is it a multi-million ounce deposit? No. Is there an opportunity potentially to get it north of 1 million ounces to 2 million ounces? Possibly, maybe, by way of success in the drill bit. But you know, there's just a number of opportunities here that one can point to, and that's again one of the biggest reasons I stepped in. I've done extremely well financially with anything I've done in the mining space, and you know, I'm not writing $1 million check for any other reason than to make money. And has it taken me a bit longer? Yeah. Do I still think I get there? By all means, by all means.
And you know, for another
And
conversation, a sensitivity to the increase in the gold price. My goodness. So.
You know, I have to add, because you get one-off comments from folks that maybe don't really understand the context of the capital market. Gold was doing some very good things until about August, September, and then it started to trail off, and it's continued to trail off. I think you'll see the next leg up with the stimuluses that are being put in place, the infrastructure bill that will arguably
We'll find out at 9 o'clock tonight.
Well, I think it's an indication. And you know what? Last I looked, gold's still trading at 1775, but also as an investor of some of the larger companies out there, I'm a bit miffed to see Barrick trading at 26 bucks when it was at $42 this time last year. Doesn't make any sense. You'll see those valuations change. The market will start to change. No different than the base metal space. I'm chairman of 2 other copper companies. They've gone up considerably. They will continue to go up considerably. They're development stage projects, but the commodity price and the interest in the space will not go away. And I still think that's the case for gold here in the coming months.
Thank you all for tuning in. On your way out, please share your feedback. It'll get to Julio, all of it. And you get a replay will be available. You'll get an email. Actually, the original link will work shortly for the on-demand. And if all that fails, go to amvestcapital.com/replays, and it'll be there in an hour. Very simple.
And if anyone's wondering,
in a week,
that little 350-ton truck behind me, it's filled with candies and chocolates, in case you're wondering. Some with silver and gold outline. But thank you, Campbell. Thank you, Stuart. Thank you to the entire Amvest team. Very much appreciate organizing it.
Good night,
Thank you, everyone else, for calling in.